G'day traders, Stacey Burke from Stacey Burke Trading. Today, just going to go over the Euro New Zealand cross rate. And after yesterday's Italian referendum, we saw that the Italian vote the referendum was defeated, and the Prime Minister resigned. Obviously, this affecting the euro, but also we had the shock resignation of John Keys, the New Zealand Prime Minister. So I thought we'd look at the Euro New Zealand cross, as it provided quite a bit of volatility right off the start of the day. But if we look at our hourly chart of Monday, December the 5th, one of the things that we talk about in the most recent videos is using the high and low of a range as Asia closes. So that's given the market 6, 7, 8 hours of time to digest this information. We saw the market open very heavily negatively right off the bat, first few hours, and then as Asia started trading, returned back down towards those lower levels. But as Asia came into a close, we saw that the bulls had started an early breakout, and as Asia closed and London came on board, we saw a very dramatic bullish entry back into the market. Now, one of the things that I want to talk about with that is that, again, one of the things I've said in the past few videos is regardless of where you decide to enter the market, if you have a methodology in place, but one of the things that I believe in terms of how I approach the market is that when I'm wrong, I'm usually wrong right away, and I want to look for the smallest possible stop in terms of protecting myself. So early bulls would have been able to have a 1-bar stop here. Like Al Brooks talks about, after a breakout and a pullback, we have the bears coming into the market. It's a small bear candle. There would have been bulls placing an order 1 tick above the high of the bear bar at Asia close, with their stop below that candle. Now, as that market exploded, bulls would have been picked up and their stop loss automatically activated. Now, had you not entered the market and you came on as London opened, because this created too much uncertainty or fear, one other thing that we'll look at here is, if you notice that Asia close was above 50% of that first 8 hours of trading that had taken place. Now, if you were game enough to take a trade after the explosive move on that spike bull candle when London opened, again, you'll notice that we are testing these highs from the bearish candles from the early part of Asia. But one of the things with this is that you could place your stop below the low of that bull candle. You could place your stop at 50%. You could place it at 0.75, or you could place it at 1 ATR, whatever you like. But this is just an opportunity to position yourself in the market after a strong move. Now, again, there's a couple of options here. Traders may have entered on the clean break of the high from Asia as well, and again, a 1-bar stop. So at any point, if you're entering on a breakout or a explosive move, one thing Peter Brandt goes over is that when he trades, he's a breakout trader, classical chartist. If it's a strong breakout, that breakout shouldn't fail. They should protect that candle. So, but the second part of what I wanted to go over with this is that if you just take a look at this range that we had from the Asia high to the Asia low, and again, I do this on every day when I look at the different markets. I look at the range. If I'm in a breakout move, or if I'm in a trade where the market starts to retest a high and we get an explosive move, I will immediately reproduce that distance above or below to see where we might see potential for two-sided trading to come in. And as you can see, the market reproduced that same range from the early morning session, and traders were able to set a target. And again, even if you got in on this larger candle, you're still looking at maybe 3 to 1 in terms of your return to risk. So if you were on a shorter time frame, basing it on the 1 hour, you may have been able to position yourself with even better odds. Whether this is an end-of-day market, a weekly chart, or an hourly chart, these moves show up over and over again. So one of the things to look at is when you've got a range and the market breaks out and you're seeing strong follow through and you're in that trade, position yourself to look for reproducing that range and look to see if the market provides two-sided trading. It may explode through that range and even give a greater return, but that gives you some fundamental basics to start looking for some asymmetrical reward to risk trades. Hopefully you got some value out of today's video, traders. Look for these measured moves. I think this pair will probably provide some other good opportunities as the market still digests the Italian referendum vote and the shock resignation of New Zealand Prime Minister John Keys. Have a great trading week, traders, and may the market go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.